Good afternoon. Asian markets were mixed following a volatile session on Wall Street overnight, where investors reacted to comments from the Federal Reserve and US GDP data. The Nikkei in Japan gained around 2% and mainland Chinese markets fell. Hong Kong's Hang Seng Index declined just over 1% in late afternoon trading. US GDP numbers showed that the US grew 6.9% in the fourth quarter of last year compared to the year before, beating analyst expectation despite a surge in Omicron cases. Oil headed for a sixth straight weekly gain, with prices trading near the highest level in 7 years on signs of robust global demand. To talk to us about how all of this is unfolding, especially when we hone in on tech shares, we are going to be talking to the finance ghost. He's our market analyst for today. So, let's talk about, the central bankers. What we've seen on their side is that they're taking that harder line on inflation. And what we've also seen is the move away from high growth stocks into value stocks, especially when you look at what's going on now with ARK Invest founder Cathie Wood saying that innovation is on sale. So I'm not sure. Do you buy that? Innovation is on sale?
Nastasia, thanks for having me. So innovation is on sale, but I don't think the discounts are over yet, to be honest. There is a rotation to value, and not just old-fashioned value stocks, but also value within tech. We're almost seeing a tale of two tech sectors at the moment, the sort of Cathie Wood stocks, which are still, I think, in serious trouble, and then some of the leading tech stocks, which, have only sold off 10 or 12%.
Right. So, let's talk about, the beginning of this year. The last time you and I had a conversation was in late December. What have you done this year, in particular to your portfolio, given what's happening in the environment right now, market-wise?
Yeah, so I did have some exposure to some of this frothier growth stuff, although I've always been a bit skeptical of when it might start to fall over. And I think it was in the last few weeks that I realized that, okay, this could get quite nasty. So I got out of the way of a few things. For example, I sold my Nvidia shares. It's a great company, but again, massive valuation. I sold out my Signia Fourth Industrial Revolution ETF completely, switched into another one that's very highly weighted in Microsoft and Apple, for example. So in my tech portfolio, I've very much moved into the big tech companies that are generating incredible cash flows and still growing very quickly. People forget that Microsoft and Apple are still growing so well.
So let's stay, in terms of the U.S. side of things. It's U.S. earnings season and the banks kicked us off. And what I'd noticed from some of the companies publishing their numbers is that earnings guidance seemed to have been opaque. And that's probably because of inflation and rates. And they aren't seeing really a strong conviction on growth, given the other uncertainties that are out there. What companies have you focused on that perhaps surprised you on the upside or downside when you look at U.S. earnings season?
Yeah, so the companies in the US are forced to give guidance, which makes that market quite exciting, actually. And I think there's an enormous amount of uncertainty among those leadership teams. One example, Taiwan Semiconductor Company, which is the biggest manufacturer in the world of chips. And we know how much of a shortage that has been and the havoc that has caused. They refused to give any capex guidance beyond essentially the next 12 months, which the analysts really didn't like. If you read that earnings call, they try and ask in 4 or 5 different ways to try and get an answer, and nothing was forthcoming. And that's because these management teams just don't quite know yet how it's all going to play out in terms of a few things: inflation, rates, and the ongoing demand for ultimately digitalization. So cloud computing, for example, all the reports you read will talk about growth of 20 to 25% for the foreseeable future. And that's why I'm so long something like, Microsoft. But other stuff like chips, how much of this is cyclical? How much of it is supply chain issues caused by COVID? So I think that's starting to make people a little bit nervous. We saw what happened to Netflix. It's incredible to see such a big company lose a quarter of its market cap in literally one day in response to an earnings announcement.
Right. So locally, we've also seen some trading updates from our retailers. Is there a particular trading update? And I'm sure we'll see a better picture when they publish those financials. But is there a trading update that piqued your interest?
Yeah, so you've got to be really careful with the retail trading updates. Firstly, you have to look at what period they are for. Some of them, for example, end on Boxing Day. Others end on the 2nd of January. And that can actually make quite a big difference, especially, as you'll recall, we had significant lockdown restrictions in the comparable period. So, that's something to be very careful of. And then you also have to look at whether the reports or the updates are for a 3-month period or a 6-month period. So when you're reading these, just be careful of that. But the one that stuck out for me is definitely ShopRite. I mean, I know, and I've been writing for a while, that Woolworths is struggling on the food side to compete against ShopRite through their Checkers banner. And we can see it in these results. Woolworths Food, they could only grow 3.8%. In comparison, Checkers posted 11.4%, which is incredible. And there are still, I think it's 2 Checkers hypers that are closed from the looting. So, you don't have to be a genius to see where the market share is going there. Checkers is really, really eating Woolworths' lunch at the moment.
And this morning we saw a trading update from Massmut, the Massmut story. I mean, do you think we'll ever be able to get on track with this one, given what was happening with Game?
Yeah, so I've only managed to just skim it. And to be honest, that group at the moment, I don't see how they turn Game around. I mean, it only still exists really because Walmart kind of bailed Massmart out during the pandemic. If you go and troll through the financials, you'll find some loans that kind of kept the lights on at times. So I'm not bullish at all on Massmart. I actually made good money on it in 2020. It was a great trade. But as a long-term play, I think they just have too much work to do. And builders in that section of the announcement, when I skimmed it, they talked about the slowdown at the end of last year. And we've seen that in the cash build numbers. We've seen that in the building company, part of Pepcore. And builders is a huge part of the Massmart story. So if that's slowing down, macro is quite mature, that's a worry for investors. I don't have a position there.
All right, let's leave it there. Thank you so much. That is the Finance Ghost.